Imagine waking up to the news that the labor market is on the brink of collapse, with hundreds of thousands of fewer jobs added than initially thought. This could be the harsh reality we face on Tuesday, as the Bureau of Labor Statistics is set to release a major revision to the jobs report, potentially showing that the nation's employment growth has been vastly overstated. But here's where it gets controversial. The revision could have significant implications for the Trump administration, which has been under fire for its handling of the economy. The latest jobs report has already sparked concerns about the labor market's health, with some experts pointing to a slowdown that may have begun much earlier than previously thought. Economists expect the BLS to issue a major downward revision, showing that the nation added hundreds of thousands fewer jobs than first reported, with some estimates suggesting that hiring during the 12-month period through March 2025 could be about 800,000 jobs lower than previously reported. This could draw attention from the Trump administration, which has been critical of the monthly jobs report, and even fired the commissioner of the BLS after a significant downward revision last month. The revision could also have a significant impact on the Federal Reserve's decision to cut interest rates, with some economists expecting a rate cut as early as September 17. But what does this mean for the average American? And this is the part most people miss. The revision could show that employment was reduced by about 775,000 for the 12 months through March, which would indicate that the average monthly job growth in 2024 actually stood at 100,000 per month, down from the 165,000 previously reported. The revision would cover only the first 3 months of Mr. Trump's second administration, with the bulk of the time frame occurring in the last year of former President Biden's administration. Job growth has slowed dramatically in recent months, with employers adding an average of 29,000 jobs each month from June through August, according to the most recent BLS data. So why does the government revise its jobs data? The answer lies in the way the data is collected. The BLS updates its data each month to reflect more recent information it has received from businesses about the pace of hiring. However, once a year, the BLS also issues an annual revision based on fresh data from the quarterly census of employment and wages, which tracks employment and wages reported by employers that cover more than 95% of U.S. jobs. The QCEW's detail lets it directly measure jobs added at newly opened workplaces and lost at closing ones, which account for several millions of employment churn each year. But here's the thing. The last annual revision showed that employers added 818,000 fewer jobs in the 12 months ended March 2024 than previously estimated. This downward revision was seen as evidence that the labor market was showing cracks, and it was viewed as paving the way for the Federal Reserve to cut rates at its September 2024 meeting. Now, with the labor market hitting a wall in recent months, economists expect the Federal Reserve to cut its benchmark rate at its September 17 meeting. The only question is whether the Fed might usher in a jumbo cut of 0.5 percentage points, or opt for the typical cut of 0.25 percentage points. But as Anthony Saglenbean, Ameriprise chief market strategist, noted, if the August Consumer Price Index comes in hotter than expected on September 11th, that would likely throw cold water on the idea that the Fed is considering an outsized September rate cut. And this is where it gets really interesting. President Trump has repeatedly lashed out at Powell over the Fed's decision to keep interest rates level, and has even publicly mused about whether to fire him. However, many legal experts say it's not clear he has the constitutional authority to do so. The controversy surrounding the BLS and the Fed is not limited to the Trump administration. The National Association for Business Economics has come out in support of the BLS, urging policymakers to defend the integrity of the U.S. statistical system and ensure it remains the global gold standard. The association noted that a commissioner with deep expertise and independence is essential to maintaining public trust, ensuring impartial analysis, and safeguarding the credibility of U.S. statistics. So, what do you think? Do you agree that the labor market is weaker than previously thought? Should the Fed cut interest rates to stimulate the economy? Share your thoughts in the comments below. As we wait for the revised jobs report, one thing is certain: the fate of the labor market and the economy hangs in the balance. Will the revision show that the labor market is indeed weaker than previously thought? Only time will tell, but one thing is for sure: the implications will be far-reaching, and the debate will be heated. The question on everyone's mind is, what's next for the labor market, and how will it affect the average American? The answer to this question will depend on various factors, including the revised jobs report, the Fed's decision on interest rates, and the overall health of the economy. But one thing is certain: the road ahead will be filled with challenges and uncertainties, and it's essential to stay informed and up to date on the latest developments. As the situation continues to unfold, we will be keeping a close eye on the labor market and the economy, and we will provide you with the latest news and analysis. So, stay tuned and let's navigate this complex and ever-changing landscape together.